In this video, we'll compare the biggest crypto trading apps, all of the fees, features, and other important information that you might need to know. Some of these focus more on the fiat currency side and payments, others more on crypto and trading. So I'll compare these features right here. They'll be listed as timestamps down below, and we'll go through the best crypto trading apps for your use case. In reality, crypto trading apps are just financial apps, just like Revolut, Wise, or even banks, but obviously with more features. And so they want us to put our money there because they charge us trading fees, or they take some sort of fee out of the products that they're giving us. So that's why they want us to use them. Some of them offer bonuses for sign up and deposits. So I'll leave the links down below to all of the different offers of these applications that I'm looking at. Some are really good. For example, Bybit and OKX give really good trading bonuses if you're a trader, so you're trading crypto futures and things like that. For normal users, you're not going to get much, maybe like a $25 bonus if you sign up for a card, like on crypto.com. Some other cash bonuses for signing up and doing things. These change all the time. So like I said, I'll leave the links below. You can see the offers for when you're watching this video. Now we'll come to the most important aspect of these apps, which is getting money in and out of them. What are the options here and what are the costs involved? Well, some of these applications focus much more on trading and exchange. They actually have much cheaper trading fees for the most part. And then there's some other apps which focus much more on the consumer side of things with payments and are much more willing to deal with fiat currency. Those are usually a little bit more expensive. What a lot of people do will actually have one or more of these applications. So you have one application which is very good for fiat currency. So you can get fiat currency in and out easily. And what some people may do, myself included, is have exchanges where you go and exchange assets. And the trading fees are lower, and so you can save some fees on there. Because it's crypto, you can very easily send crypto from one exchange to the other within a few minutes. And so any money that can be saved via that setup is a good thing. So how do we get money into these platforms? Basically, there's two ways to do that. You either spend money through your card, credit or debit card, or you just send money via your local banking system. Now, not every single app has great banking support in every region. It's a bit patchy, which is why this kind of two-stage setup is pretty good for most. So if you're going to buy crypto with a card, most exchanges allow you to do that directly on the exchange. You just go in, buy crypto, put your card details in, you spend the money and you get the crypto in your account. That's going to cost around 2 to 3% in fees because you have the exchange fee and the card fee and everything like that. It's the most expensive way, but it gets the job done. The other way is a bank deposit. This is always free to send money into the exchange. So what you'll do is say that you want to deposit some local fiat currency. They'll say, here's the banking details and here is your account number. Include that when you make the bank transfer, and it usually clears within a couple of days into your account. The exchange will not charge for that, but your local banking system may or may not. The other option is peer-to-peer. Because the exchange in your region may not be regulated for certain fiat currency payments. And so what you can do is use a third-party FX house, basically. What will happen is that the FX exchange in your country will have an account with the exchange. You will have an account as well. You send the payment to them, a local payment, and you prove that you sent the money. And the exchange in the middle is essentially an escrow agent in this case. So as long as you prove to the exchange that you sent the money, the crypto that's been locked up from the exchange agent will be sent into your account. So you can use bank transfer usually with that. That's the three ways to get money into your exchange account. And the fees, as you can see here. When you want to withdraw money out of the exchange, you obviously have to sell the crypto into a fiat currency, which will have a trading fee, which we'll get onto next, and then withdraw that into your either card or bank. A card, again, is going to be a couple of % fee. If you withdraw the money into a bank account, it usually costs around $3 to $10. It depends on the country and the banking system. Some exchanges have much better fiat currency links than others. So Revolut, Coinbase, Crypto.com, Kraken typically have pretty good fiat currency support. So if they're available in your country, have a look. Especially Revolut, really, really good fiat currency support. And you can actually trade crypto on there, or you can send the money out into another exchange. The other three, Binance, Bybit, OKX, typically are the kind of trading exchanges with typically less good banking support, but very, very low fees for trading crypto. although their banking support is becoming much more robust as well. So you'll just have to look at the exchange in your country and what it supports. Now we'll get to trading fees in these exchanges. And like I said, the more consumer-focused applications always have higher fees. I don't know why, because it's the exact same thing that they're doing, but you can make a decision here. Binance, Bybit, and OKX typically have the lowest fees. You're going to be paying around 10 basis points, which is 0.1% for everything you trade. So if you buy some Bitcoin, you'll pay 0.1% of the dollar amount that you've spent. So if you buy $1,000, 10 basis points or 0.1% of that $1,000. When you sell, the dollar amount that you sell to, or the fiat currency amount that you sell to, you'll pay another 10 basis points on that as well. Now with Binance and some of the others, you can get trading fee discounts. If your volume is very high, if you trade a lot, you get discounts on trading fees. And if you buy some of the exchange coins as well and just hold them in your account or do some other specific things, you can just get discounts on the trading fees as well. But mostly on these three, you're going to be paying around 10 basis points. As you come down to the more consumer-focused apps, you're going to be paying higher fees. So around 0.5% on Coinbase, 25 basis points on Kraken, all the way up to 1.5% on Revolut. However, with Revolut, there is Revolut X where that can go down to around 10 basis points as well. So pretty cheap. Now, Crypto.com charges a spread. A spread basically isn't a trading fee, or they don't charge the trading fee on top of what you trade. What they're doing is just giving you a much worse price for the crypto that you trade. So rather than saying, let's say the price of Bitcoin is 50K per BTC, instead of saying you're going to buy $1,000 of Bitcoin at 50,000, they'll charge you 50,200 per BTC. And you buy $1,000, but you just get less Bitcoin. So it's not a trading fee. It's kind of in the price. Now, usually when that happens, the trading fees are very, very high because it's just bundled up in the price and you don't know what you're paying. So not great, but in any case, these three are cheap. These three are more expensive. And then Crypto.com in the middle, which we don't really know what they're charging because they don't tell us. If you're looking to use crypto networks directly, or you just want to take self-custody of your assets, then you need a crypto wallet. There are many good standalone apps and hardware wallets out there. I've got some videos on those down in the description. You can see the best wallets. But a lot of these exchanges now are letting us create these wallets directly in the app. That just makes things easier for beginners for sure. So you can have your balances in the centralized exchange app, then you can flip over to the Web3 wallet. You can send balances between the centralized exchange and your wallet very easily. The way that they do this is set up the wallet either via an MPC type wallet, a passkey wallet, or potentially a seed phrase wallet. These different types of wallets have some pros and cons. Again, I'll leave the details for the videos that I'll link down below in the description. But essentially, you get a blockchain wallet that you can use. You can link it to applications, and you can take self-custody of your assets. That means that your assets aren't on the centralized exchange. That means if the centralized exchange goes bust or something happens, your money isn't tied up there because it's in your custody and it's in your wallet. So for right now, Binance, Bybit, OKX, they have really good Web3 wallets. Coinbase does have a Web3 wallet in the app. It's decent, but it's still in their custody. Crypto.com and Kraken have standalone apps that are separate. Same for Coinbase as well. They have a standalone Coinbase wallet, but they also have a Web3 wallet in the app. Revolut doesn't have any for now. But if you are looking for a wallet, maybe that's a great step for a beginner, just to link it with your exchange and have it all in one application. One of the big benefits of crypto exchanges is that you can send money anywhere in the world within a few minutes. And the cost is fairly low depending on which blockchain that you use. Now, if you know that the person you're sending money to has an account with the same exchange, for example, if you have some money on Binance and the other person has a Binance account, that is just an internal send. And so it's free and instant. That usually works the same for pretty much all crypto exchanges. They'll just let you exchange balances between different accounts on that crypto exchange. If the other person has an exchange account somewhere else where you don't have an account, then what you'll have to do is send the crypto to that exchange using a crypto network. So that's how they get the messages between the two exchanges. Now, depending on which blockchain that you use and the asset that you have, the fees may be a little bit different. In any case, you can see a breakdown of them here. So Bitcoin, ETH, and then if you're sending dollars like a USDT or a USDC, you can see the fees here. The fees are pretty competitive amongst all the exchanges. Again, it's usually these three with the cheapest exchanges. and then down here with slightly more expensive. And also network support is important as well. Binance and OKX pretty much the best. Bybit very good as well. And then as you come down, the lower ones are really going to focus on the majors, so Ethereum mostly and some other major networks. Some of these exchanges also let us sign up for debit cards or prepaid cards. So this just lets us cash out of our crypto balances and then spend them just like a normal card transaction. So you don't have to send it back to your bank. Some of the fees here to be aware of are, of course, if you're trading out of the crypto, you'll have to pay a trading fee to get the crypto into the fiat currency of your region. Then when you spend the fiat currency, that's usually no fee because it's just a normal card transaction in your region from your fiat currency. If you spend abroad, then there will be an FX fee on top as well because you're going from your fiat into some other fiat currency, usually around 1 to 2%, but the exchange may charge a little bit on top. All of these fees and offers as well change, so you'll just have to check the details when you're watching this. The Bybit card is pretty good. I've got this one. It's no annual fee, and there's a 1% FX fee if you spend out of region. Coinbase is actually good if you have USDC balances. So if you're in the States, I think this one's really good because you can just have USDC like a USD balance and you can spend it with no usage fees. Obviously, the crypto trading fees can be pretty high if they need to liquidate your crypto and spend the dollars. So be aware of that. What I would recommend is selling out of your crypto first using the advanced trade feature, which has lower fees, making sure you have that balance on your card to spend it. You can see the other details here. For Crypto.com, they have many rewards and offers like Netflix and Spotify and some other things. The best card probably is Revolut. It's really a fintech app that was built on that card, which lets you spend pretty much in any supported country and currency with the card. So you just spend the money on the card. The FX fees are pretty low, and you can get your crypto balances into fiat currency in there and then spend in many different regions. Now we'll look at the earn platforms on these trading apps. And there's really three main ways that you're going to be getting some yield on your assets here. So I'll explain them. However, there may be some specific differences between the exchanges. So be really sure of exactly how the yield is being generated and if it fits within your risk profile. So there's really three main ways. The first one is the exchange is going to take your stablecoin balance. So if you have a US dollar stablecoin or a euro stablecoin, it's going to take that balance and it's going to invest it in a money market fund. The money market fund is a fund of government debt securities, and you will be getting the government interest rate on that. It's usually pretty low, but if you've got a cash balance, you should really be getting that. So for example, Coinbase, if you hold USDC, I think in the States, they'll give you the overnight rate, which is currently around 5%. And just for having that balance, they take a percentage out as a fee, but you're getting the overnight rate. Now, as the overnight rate fluctuates, your rate will fluctuate. But that's what you should be getting. Some other way to get yield is that you may actually take a stable coin or another crypto and lend it out directly on the trading platform. Some other traders may want to borrow the assets for trading reasons. They pay a fee and essentially an interest rate. You get the interest rate. Now, that's not investing in government securities, and so it has higher risk. So they're the two ways to get yield on stablecoins. So be aware which one is happening. The other thing you can do on earn platforms is stake your crypto. So if you've got ETH or Solana, ADA, Polkadot, some other big proof of stake cryptos, the blockchain pays a fee or a yield to stakers. So the blockchain earns money by charging trading fees and pays staking rewards. So you can just do it directly through the earn platforms. And the rate will be whatever the blockchain earns. That's not lending. You are just taking your crypto and staking it and getting some blockchain rewards from the blockchain. Revolut doesn't allow that, but you can actually invest your cash in government debt pretty easily on there as well. Some other important things to know about these crypto exchanges is that they are private businesses. They're not banks, and for the most part, they are not protected by any deposit insurance schemes in your region. Now, the only standout here is Revolut, which if you have a Revolut account and you have a cash balance in there, I know for sure in the UK, that will be protected just like a bank balance if anything happens with Revolut. The others, that's not going to happen. In fact, when you give your crypto to them, the terms and conditions for the most part will say that you are giving up custody of your assets to those exchanges. If the exchange goes bankrupt, those assets will be kept in the bankruptcy estate and you'll basically get nothing back, after time. That's an issue. So what many people do is take self-custody of them using the Web3 wallets or their own custody solution. A difference here as well as Coinbase is that Coinbase is actually publicly listed and traded on the stock market in America, I think the NASDAQ. That means that all of their balance sheet and profit and loss statements are public. And so it's a lot less risk there because we have transparency in that. The others are private companies and we really don't know what's happening there. Right? So we can trust them as much as we want, but we don't really know what's happening behind the scenes. So it's a risk factor. The other is country support. Some of these exchanges are going to be great in your region. Some won't offer a lot of products or even the exchange app at all in your region. So you'll just have to check in your region to what's supported. Like I said, all of the bonus links and other helpful videos will be listed down in the description below. I'm James, it's MoneyDG. Cheers for watching, and I'll see you in the next one.